Quickly get in Sandip Agarwal, fund manager, Sowilo Investment Managers on the show. Sandeep, CLSA, Kotak, these were pretty much the last bastions who were still bullish on large cap IT names. And their call was that stocks are trading below their intrinsic value and therefore valuations were inexpensive. But this week, we've seen both of them downgrade the large cap IT companies. What's the call now?
Hi, Rima. Good morning. Thanks for having me on the show. So, I reiterate that this will be probably a year of very good return in the IT index. Of course, the base size of the large cap is very big. So for them to report mid-teens or high-teens growth is little difficult. I will put them at 6-7% dollar growth, but the margin improvement and everything taken together. As I mentioned multiple times since March, I believe that the IT sector as a whole should give a cumulative EPS growth of 45 to 70% over next 3 years. And even if the multiples remain same, that is the kind of return you will see. And last month we saw in 1 month we got 20% return in the sector. I believe lot more return is yet to come. So I am very constructive on the whole sector, barring 1 or 2 companies where there are management issues for last 2 decades. I won't comment on them, but otherwise I am positive on the whole sector, barring ER&D companies because they are very expensive. And I think there is some disruption which is still not discounted in them. Otherwise, the typical services company, my preference small cap over mid cap and mid cap over large cap, but I'm positive across the board. And I love the hardware players the most because I believe that hardware players have long way to go still from here.
Okay. So, Sandeep, you expect a 45, 50, 70% return, even if the top line growth remains in low to mid single digit, because the other fear is that the competitive intensity in the market is intensifying. The deal market has not expanded enough to absorb everyone's growth ambitions. Plus, some of these companies like Accenture, Capgemini, Cognizant in the last quarter have grown faster than the Indian large cap IT companies. And then there is the risk of pricing. So do you think that even if the top line is, 3, 4, 5% for the next 3-4 years, you can still get very strong returns, share returns?
So I don't have this view that top line will be 3-4% growth. I believe that we will be 6-7% for large cap and 10-12% for mid cap and 15-16% for small cap in dollar terms. Now you add the rupee benefit and everything, then the numbers are phenomenal. And I'm very confident because see, I've seen this sector for now last 25 years. You see what guidance Infosys, for example, has given in 10 and 11 and what they actually did, what guidance these companies have given in 20, 21 and 22 and what they did. So, it is a B2B business, very tough even for the management to guide. And we are blessed that all the management in India in the IT sector has always been very conservative. And because of that, the data which comes to the analyst community generally is rephrased version of what the management is saying. And for them being into B2B business, it is very tough to give a call when the demand will come. But my belief is that the way, enterprise AI is getting adopted, you will see all this today's concern will go away. The way they had gone away from March to now, it will further go away from now to, next 3 months. And I believe that a lot of money will be made in this sector in coming few months. And we are very, very constructive, as mentioned earlier also, from zero weight before March, we are now almost like 15 to 20% weight, which includes hardware players also. And we are very constructive. We may even increase weight more from here also.
Okay, Sandeep, unfortunately, very little time today, but counting down to the opening bell, 4 seconds to go.
Okay, well, we'll see how those stocks are opening.